for a pop quiz. What does it mean to have a good credit score? Your credit score is like your adult report card. So are you passing or failing? Let's find out. Your credit score is like a financial report card with scores ranging from 300 to 850. It's a numerical representation of your credit worthiness. Basically, how likely are you to repay borrowed money? Lenders also look at your credit score to determine your interest rate. For example, let's say you want to buy a new car. You apply for an auto loan, and then your lender is going to look at your credit score to determine how likely you are to pay back that loan. Your credit score determines what your interest rate will be for the loan. So, as you increase your score, you lower your interest rates and you save more money. So what impacts your credit score the most? The two biggest impacts to your credit score are payment history and amounts owed. So as you can see, you can lose 60 points for one 30-day late payment. That's a lot. So what you can do is you can set up automatic payments, or you can set a reminder in your calendar on your phone. Just do whatever works best for you and your system to make sure that you pay your bills on time every time. Consistently paying your bills on time shows lenders that you're reliable and can be trusted to pay back the money you borrowed. Next is amounts owed, which is 30% of your credit score. Amounts owed is your capacity, basically the ratio of how much credit you're using compared to your available credit. So to get your capacity, you take the total balance on all your credit cards and divide it by the total limits on all your credit cards. Here's an example. We take all your credit cards and your balances equal $500, and then we divide it by your limits, which equal $1,000. So we take 500 and divide it by 1,000 to get the percentage of capacity used. So your percentage would be 50%. According to FICO, that's a high capacity. So a good rule of thumb is to keep your capacity to 30% or less, which is what FICO considers healthy. With credit cards, try to only charge what you can pay back in full each month to avoid high interest rates and keep a low capacity. Keeping your capacity low shows lenders that you can manage your credit responsibly without having to rely too heavily on it. So, paying your bills on time and keeping your capacity low are key to maintaining a healthy credit score. We talked about the two biggest factors that impact your credit score. Now, let's look at the other important factors: length of credit, mix of credit, and new credit. Let's start with the length of your credit history. This makes up 15% of your score. Let's say you have an old credit card you opened when you were younger. Keep that card open and active if you can, because a longer credit history gives lenders a better picture of your long-term financial behavior. Next, let's talk about mix of credit, which is 10% of your score. Having different types of credit like credit cards, loans, and a mortgage shows lenders that you can handle all types of credit. Basically, don't just have a credit card or two, add other types of credit that make sense for you. The last factor is new credit, which accounts for 10% of your score. New credit looks at how many accounts you've opened recently and the number of hard inquiries on your credit report. Sometimes to build new credit, you just have to open up a new trade line like a loan or a credit card. But keep in mind, opening several accounts in a short period of time can be a red flag to lenders and may lower your score. Try to limit inquiries for establishing credit to about 3 per year. So to recap, in addition to paying your bills on time and keeping your credit card balances low, your credit score is also influenced by your length of credit history, your mix of credit, and new credit. Understanding these factors can help you manage your credit more effectively. A credit score is often misunderstood, so we're here to help break it down for you and offer a complimentary credit score analysis to see if you make the grade. You can visit any one of our locations, or for your convenience, you can download our Rave video banking app and chat with one of our representatives to see how you can improve your credit score today.